Hello, viewers and listeners. I'm Suresh Shankar, founder and CEO of Crayon Data, an AI and big data startup headquartered in Singapore. Welcome to this episode of Slaves to the Algo. That's right, Slaves to the Algo, my attempt to demystify the age of the algorithm, which seemed to be taking over our lives both professionally and personally. In this episode, I'm delighted to have Greg Palmer, a fintech expert, a columnist, a podcaster, vice president of the Finovate Group, whom, as we all know, is that real connector between traditional banking, consumers, fintech companies, and director of fintech strategy at the Informa Group. Finovate actually does a lot of showcasing of cutting edge banking and financial technology, algorithmic and otherwise, through a unique blend of what they call the 7-minute demo and key insights from thought leaders. Welcome to the show, Greg.
Yeah, thank you so much. My pleasure. I really appreciate you having me on.
And Greg, you're a podcaster yourself. And so I think what I hope to do is to have a very interesting conversation with you about things that you are seeing about how data and algorithms are being used by fintechs, by banks. You have a fairly global perspective. And you sit in the hotbed of technology in Seattle. So, but I'd like to actually begin the show by asking my guests a slightly more personal question. We're not affected as individuals. We all love technology. We technologies in some form or fashion, but we're also affected as individuals by the development of data and AI and what it's doing. And so, one of the things I like to ask my guests is, can you share some example of some really nice ways in which great algorithms or a data set has impacted your life, either positively or you something in a fearful way?
Yeah, absolutely. So, the first thing that comes to mind is, looking at our Finovate conferences. It's really the first time that we kind of have played with AI technology ourselves on a professional level. And this was really interesting for us as we started to see what was possible around intelligent matchmaking and bringing people together, creating these connections between two individuals. From a professional standpoint, I think that's really been the artificial intelligence that I've seen, that I've played with. And it's really worked wonders for us. And I know our attendees enjoy it as well, because it lets them kind of get to these better meetings faster. They can kind of sift through a lot of things and connect with the people that they really want to connect with. On a personal level, kind of outside of that professional setting, I think that, the AI that I really enjoy the most as an end user is the AI that I don't even really see, right? When I start to see something that I feel like looks like AI, it can be a little bit off-putting, right? It can be something where you start to say, wait, how did you get that information? Or how did you make that connection? It's the ones that you don't see that happening, where you get these excellent user experiences, whether it's as simple as getting a song recommended to you. Hey, you enjoyed listening to this artist, maybe you would also like this other artist. Things like that I think can be really fun. Or whether it's that I always kind of bring it back to financial institutions, when your bank can anticipate a need that you have, when they sort of say, we're guessing that you might be thinking about this, and so here's an offering that's targeted, that's timely. Those types of situations, I think it can work really well. Where it can be more off-putting is if you feel like you're being sold to, right? Is if you feel like there's somebody who has, they're kind of eyeing you up, and they're like, well, we know all of these things about you, and we know that you're probably about to go to Home Depot tomorrow and buy X amount of tools because we can see that you've just made this other purchase over here. And that's where it can start to feel a little bit creepy. And so, I think that's really the balance, right? When it can offer this seamless experience, when it can offer something that, presents a choice to you, or gives you something that says, hey, we think you might enjoy this, then it can be really helpful. That soft touch is key. When it's more overbearing, when it's something that is a little bit more forceful or a little bit more unexpected and maybe not as good, right? Maybe the recommendation is not quite in line with what you actually want to do. That's where it can start to be a little bit problematic. And that's where you can leave that bad taste in your mouth.
And that is such a fascinating summary of all the opportunity and the wonderful potential of AI and the challenges, right? When it's seamless, when it's serendipitous, it's wonderful. And when it's talking you or selling to you, it can be But I
Right.
want to go back to what you first said about the intelligent matchmaking of the meeting. That
Mm-hmm.
itself sounds like $1 billion idea, because which person in the world or listener to this podcast wouldn't want intelligent meetings with actually people that you value? Could you tell us a little bit more about how you do that?
Yeah, absolutely. So, I mean, from our standpoint, it's fairly straightforward. As a user, you would go in, you create a profile, you list out, this is who I am, this is what my background is. And then you create a series of tags about yourself. This is how I want to tag myself. And then, you get on the next page, you get kind of here's who I'd like to meet type of page. And so you can start to pick through. I'm interested in talking to, people about this subject matter. We actually go a level deeper than that. It's not just what subject matter, but it's sort of which side of the conversation are you on? Are you looking, are you a fintech who's looking to connect with bankers? Are you a banker who's looking to connect with fintechs? Are you a venture capitalist who's looking to connect with, anybody working on this in this space? Are you an analyst or somebody else in the industry looking for that hot scoop? And so are you just kind of looking for, this very specific fintech founders? There's a whole bunch of different ways that you can sort things and personalize it. And then the system on the back end just, starts to create meetings for you. You set up, I've got 2 hours or however long you want to spend. It can kind of plug in time for you. And then, it's as simple from an attendee standpoint of just showing up. So, when we were doing events live,
I'm a guy
ahead.
who's out there trying to sell something, and I look at this. I have my 2 hours. I filled up my tags. I say who I want to speak to, and basically the system says meet this guy, whatever it is, and it gives you the location inside your conference. I mean, yes, I wish we are back at physical conferences, but that day will come.
Yes.
And similarly, if I'm a bank, I actually see my schedule, and it's all out there populated. Just turn up, have your chat, and go on. Is that it?
Yeah, basically. So the live event experience, which we'll be getting back to at Finovate Fall this September, we will be able to bring at least some people back in. We're still working with the city and everything, city of New York and the local governments there to figure out how big of an event we can actually do. But yeah, how it worked, you would just get a notification. Okay, your 415 is waiting. Go to table 20 in the networking space. And so you would go there and have that meeting. And then, at the end of it, and you can decide, do I want 15 minutes? Do I just want to have, 10 minutes? There's a lot of customization that you can, in ways we can set it up. We've kind of standardized on 15-minute meetings. That seems to be really effective. But we're actually trying a format now with 3-minute meetings where you just get a bunch of rapid fire 3-minute meetings really quickly. And, so the onus is, you have to come to those conversations prepared. You have to be ready to talk about what you want to talk about. But in 3 minutes, generally, if you want to follow up and have a deeper conversation with somebody. So, we're kind of playing around with a lot of different time increments. Really, the end goal is all just about making that connection, letting people meet the right types of people. And of course, just like anything else, it's an imperfect tool. There are going to be times when you meet with somebody.
You follow through? And Greg, do you follow through on that stuff? Does the AI or the data actually come back and say, okay, we set up these meetings for you? Do you ask people which ones of them were useful? And do you have some learning that says, okay, these kind of things work better than other things, and in which meetings turn out to lead somewhere?
Well, the data that we track is more around which subject matters are most appealing. You'll see which groups which groups are most selected, which types of technologies are most selected. And as you can imagine, that's really valuable information for us because it helps us keep our finger on the pulse of the industry. What are people really interested in talking about? What are they interested in connecting about? So that type of data that we get is really helpful as we plan future programs, as we plan networking spaces. And of course, we're continuously updating the subject matters that we have that are available for you to meet with other people about. So that's really where we get the most useful data. We are, of course, interested in the raw numbers, what types, how many attendees actually, or how many of the meetings actually happened. And what we found is that the meetings that are scheduled through this platform tend to be really likely for people to follow through and connect with them. And I think it's because they've kind of gone out and said, this is specifically what I'm trying to do. It's a lot easier to get meetings to happen when both parties are really invested. They've both got something committed to the idea. So that's where we've seen it be really effective for ourselves.
No, and I'm going to come back to this a little bit later, but I think it's fascinating because I think one of the biggest problems that people have in the world is too many meetings that don't lead anywhere. And if Finovate has actually built something to better matchmake the meeting process, I think you guys are sitting on a unicorn idea of your own. You should spin this off as a separate company. But we'll come back to that. Getting to your core area, what Finovate does and what you've been doing for many years now, which is the banking industry. And you recently, Greg, wrote an article on FinTech Futures about your 7-year-old opening a banking account, which is fascinating, right? Because this is what bankers have celebrated about. Can I get it if the baby is born? Can we open a bank account? And your son told us a lot about what we should know about banking from your article. And could you tell us, for example, today, what are the trends that you're seeing about what people are looking for, because this whole idea of a relationship between the bank and the consumer seems to be changing, because it's no longer a bank sometimes that you're dealing with. And
Yeah, true.
what do you think are the things that people are looking for in this whole relationship between banking, which is very necessary, banks may not be, and consumers?
Well, so there's a lot to unpack there. And I think, the first thing that really struck me. So first off, for anybody who's wondering, I didn't pressure my kid to get a bank account in any way, shape, or form. This is one of the things that we've been living together. He's been going to school right next to where I've been working for the past year, which I'm sure is true for a lot of you out there listening. And so obviously, clearly it rubbed off on him. And he came and said, I want my own bank account. And what he really wanted was, a physical card. He wanted to have his own debit card. But also he wanted to feel like he was a part of, the world that I work in and live in. So from that standpoint, I think it was really good. So when I took him, I was really curious, because here's somebody who's completely new, completely green to the banking system. And so I wanted to make sure I captured his thoughts, because I think this is a unique opportunity for somebody, their very first experience. And what was really surprising was that a lot of what he was saying are things that we as an industry kind of already know. We understand the importance of the priorities for Graham, where he wanted to have personalization. He wanted to be able to choose the exact card that he had. He was really pumped about being able to do that. He wanted something that he felt was unique and personal to himself. He really, the idea, and we kind of set this up, and I didn't invent this, but the kind of 3-bucket children's banking system of spend, save, share. He really was fascinated by the share side of it. I think he's been reasonable saver. He's 7, so he's not like super disciplined with his money. But when I told him,
Too
like, you
many
can
cookies.
right, yeah, it's popsicles. It's the freezer aisle at the grocery store that if you can make it through that without spending money, that's always that's a good day. But I was telling him, you can take some of your money and you can set it aside to donate to something that you're really passionate about. And he really enjoys red pandas. We have some red pandas at the Seattle Zoo. He loves them. And when he kind of made this connection, like, I could donate money to the World Wildlife Federation and actually help keep animals in their habitats,
Wow.
it really resonated with him. And again, this is something that we know, right? There's so many studies out there, so much research that says that the younger generations in particular want to feel like their money is doing something good in the world. They want to feel like that they're a part of something bigger than themselves, and they're able to have their money create a positive impact somewhere else. And so for him, to be able to do that was really exciting. And again, this is not something new, but this just kind of emphasizes this point. If you look at where we talk about what customers want, high level of personalization is key. High level of social impact, being aware of that is really key. The other one, which I thought was really interesting, was I asked him, what do you anticipate? Why do you think it's easier to pay with a card than with cash? And he said, I can't make a mistake. I don't have to worry about giving the cashier the right amount of cash. For you and me, this is not really a big concern at that level. You can pull a 20 out of your pocket and be confident. But for him at 7 years old, this is actually something that he was thinking about. He doesn't want to do something that's potentially embarrassing in front of somebody else. And if you extrapolate from that and look at, people want their banks to offer them some kind of safety net to protect against the ability of them making a mistake, whether it's an embarrassing mistake or whether it's something that's more sinister. You want to have this feeling that there's a safeguard, there's a rail in place that's going to keep you from doing something that you really don't want to do. And so, I look at that as well. And you think, again, that particular example, maybe not as relevant once people get older, but, how many people struggle with what the financial industry considers to be kind of basic financial health, whether it's saving, budgeting appropriately. People have difficulty in this area, managing their finances. And a lot of them simply have never been taught, don't know the best practices. But there's real value for a financial institution who's able to anticipate those potential problem areas and say, actually, we can help you avoid making that mistake. We can make sure you're set up. So, those are just 3 of the ones that came out of that conversation. And again, none of that's brand new, but it was really interesting to have those reinforced by somebody who hadn't heard about any of them and was coming into it with a completely clean slate.
Well, Greg, I think what was fascinating for me as you're telling the story is that your son seems to know something, or he seems to be reading Harvard Business Review, because two of the five new P's of marketing are personalization and purpose.
Mm-hmm.
And I think, as the consumers want that, and I think your son's is playing that at an early age. And I think all brands and all banks and everybody else needs to wake up that this is what consumers want to do. But coming back to, I think, how technology can enable these things, we talked about the personalization aspect, we talked about the purpose. Now, do you see, and I think you deal with a fascinating thing because you're in between. You talk to banks and you talk to fintech. Now, which of these people, which of these two industries has more grasped the problem and I would say the opportunity that technology is providing to change some of this stuff? And can you share us some examples of what you think, are fascinating ways in which people are using data, algorithms, technology to solve the personalization or the purpose problem, if you will?
Yeah, so I think it's a it's I'm going to try and avoid painting with too broad of a brush here, because certainly when you look at banks as an entity in and of itself, banks and bankers, there's so many different kinds of financial institutions, and there are people within in roles within banks, whether they're major multinational banks or smaller community banks, anywhere in between, who I think really understand the value of these pieces. But I think it's pretty clear that the fintech side of the equation is spending more time looking at, especially personalization, right? And it's more so the ability to, how you go about doing that, I think is something. And also I think the types of people who tend to be attracted to the fintech space, you largely do that because you see a hole somewhere, you see an opportunity somewhere. And so that can make you want to get engaged. But we hear a lot of fintech companies who really look at the customer as the first and foremost piece of the puzzle. I was talking to Hugh Pleiter, the CEO of Backbase, and they've been a fun story for us. We sort of watched them grow. I remember them being at my first Finovate back in 2010, and to where they are now it's incredible. What a journey that they've been on, and we're really happy to have been part of their story. But you, in my interview with him, he said that the customer for them is their North Star. That's the thing that they always think of. Now, what they do is they build products which are very attractive to banks. They're very easy to use by banks. But by elevating that customer to that top piece, it makes it a lot easier for them to make these crucial decisions when they come up. And gives them, again, that guiding light. So I think, and they're certainly not alone in that. There's a number of other companies that we see who are doing that very well. When you get to the kind of more social responsibility side of things, here's where I think you see fintechs really starting to pull away from some of the banks that we have. I think a lot of people look at the financial system that we have and look at, the way that we give out credit, the way that we, help people manage their money, move money overseas, all of these pieces, and look at the inequalities that exist there. And I think, from a fintech standpoint, there's companies who've seen this massive opportunity from a business standpoint, a massive problem from a social standpoint. And I think they've done a lot more of trying to really push and fight for that. Now, the good news is there are a lot of banks who are now starting to really hear that message and starting to push forward. So, I think over the next couple of years, you're going to see a little bit of a split in the banking industry between companies who really have heard that message, who understand that message, and companies who maybe haven't as much. But the banks that allow people to, tap into this kind of social responsibility angle, I think are the ones that are going to be in a really good position, because we know that, the younger generation, this under 30 group, even under 40, maybe, depending on where you want to draw your generational lines. This is a significant motivator for them in terms of who they want to do business with, where they want their money to be, what they want their money to be doing when they're not using it. And so, I think that, again, there's people doing really strong work on both sides. In my experience, a lot of these issues are being driven by fintech innovators who are kind of pushing things forward. And a lot of banks really kind of need that push. They need the industry to move and to sort of force them to catch up, or else they risk kind of falling behind everybody else.
I mean, you mentioned several fascinating things in that, Greg. One of the things you talked about is this whole area of payments and how people are trying to do payments and move it, whether it's cross-border or even within between businesses and companies and so on. And this is obviously a massive area of both technological explosion. I mean, on the one hand, you have the consumer place like Klarna, who's saying, they built the buy now, pay later revolution. You had Stripe says, I'm building a new backbone. You have Zelle, Venmo. And now you have WhatsApp and Signal Signal's trying to get into this whole area of payment, right? I'm not asking you to pick the winner, but what's your take on the whole area about, because most of these depend on two things. One is they depend upon the convenience of like, how easy they make it to pay, but they also depend upon actually understanding the consumer enough to say, this is exactly what you want and let me give that to you. Could you share some light or shed some light on what do you think are fascinating uses of technology that you're seeing in this space?
Yeah, absolutely. So I think, the first thing is from a user standpoint, I think users are to some extent provider agnostic when it comes to which, I don't think they have a lot of brand loyalty in terms of how they want to
Mm-hmm.
move money. They have functionality loyalty. They want it to do what it should do. They want it to do it quickly and well. Beyond that, I don't think they really care too much. And most of the people that I talk to kind of outside of my professional life, they'll use Venmo when it's easiest. They'll use Zelle when it's easiest. And I think there's an opportunity for other brands to get involved in that as well. But I think ultimately what it's going to come down to are, there's institutional advantages that you can get when you're Zelle, and you're automatically inside the gate of a lot of financial institutions.
Mm-hmm.
That right there reduces a lot of friction, and that makes it really compelling for customers to use it because it's simply the easiest option. There's the least friction option. Venmo is another really low friction option. It's very easy to use it. The fees are pretty reasonable from a consumer standpoint. And so, again, a lot of people are gravitated towards it. I think when you look at the future of that space, it's really difficult to pick who the winner is going to be because, what I expect to happen is similar to what we saw, with kind of social media networks. There are going to be a lot of competing products that look very similar. And so, what's the difference between a Facebook and a MySpace, right? How does one of these end up becoming a gargantuan? Geez, that was tough to say. And one of them becomes a punchline for late night hosts. And so, I think that's really where we're at right now. I think, and what difference it is, it comes down to, the number of people who start to use it, just the sheer snowball effect of the more people who use it, the easier it is, the more frequent it is. So the more you need to have it too. And then the other side of it is it comes down to, how these brands position themselves, how they market themselves, how they're able to, generate that excitement and that enthusiasm to really resonate with people. And so, you look at, there's a variety of ways that you can do this. You can, you look at the success of Alipay and you think,
Mm-hmm.
well, that's difficult to replicate in a situation where you can't say, hey, you're all using this now. That's a pretty good advantage to have when you're trying to grow users pretty quickly. But you look outside of that and you think, what's going to, how does Venmo defend their position at this point? How do banks who look at Venmo and say, how come all these, we need to fight back against this? There's too many people holding money inside Venmo. They should be holding that money in our accounts. How do we go back and try and fight for some of that sharing and get some of that back? And the way that they can do it is make it really easy, make it really smooth, and then just market like crazy, because I think it really does come down to creating that belief, creating that idea that you're not the only one who has this. You don't want to be the lonely guy trying to pay through, you don't want to be the person who's downloading their music on the Zune when the world has moved on to the iPhone. And so that's I think where we're really in danger right now. For a lot of those brands, you have to be really conscious of the fact, how do I stay on top of the pile? How do I continue to anticipate those customer needs? And how do I make sure that everybody who uses it is happy using it to the point that they tell their friends, this is the one that you got to have. This is the only one I want to pay you on from now on.
And I think, what you're talking about is a fascinating thing. You mentioned customers in the context of Backbase, and then you talked about, having more users and anticipating needs. In some ways, if you have more data, you can anticipate needs better. And to have more data, you need more customers. And
Mhm.
is this what is leading, and I think it's a great thing that everybody's trying to grow and say, I'll get more customers. But is this what is leading in the fintech world to a very particular thing, which is that the race to acquire more data and that more customers who can give me more data is leading us to a kind of a path where we're doing things that are sometimes right, but also a whole lot of stuff on data privacy and how you're tracking people that is not necessarily the nice side of the story. Do you have
Mhm.
anything to share on how people are, what you see as the dangers of this whole of this whole side?
Yeah, well, I mean, certainly the dangers of holding data are out there for everybody to see. You look at the breaches and how public they are, how damaging they are to a company's reputation. Um, and it's for a long time, I think there was this idea, I want to just try and acquire as much data as I possibly can. I think
Hmm.
everybody on all sides was trying to acquire as much data as they possibly could. And then, over maybe the last couple of years, I've started to see this other idea emerge, which is, I don't want to be responsible for your data. I don't want to take that on. And so, I actually heard somebody at Finovate Fall a couple of years back having a conversation and saying, how long do I have to keep that data before I can get rid of it? Which is a question that I never in a million years thought I would hear.
Hmm.
But from his standpoint, he's like, data is a liability for me. I'm not in the business of holding data. I'm not trying to analyze it. I'm not trying to use it for AI. I'm trying to use anonymized data and then move on. And I want to just have everything be I want to hold as little as possible. And so I think that's really the question that everybody needs to be asking themselves right now. Do I want to be in the business of holding data? And if I am, what am I doing with it that's going to make that worthwhile? Because there's massive risk associated with it. So there has to be something else on the other side to balance that risk out. And if you as an organization don't have a plan for, I want to use this data to do this, we think we can build something new, we can plug it into an AI algorithm and have it do something fun for us, then if you're not able to find value there, then I think the motivation is actually on the opposite side, to try and hold as little data as possible, try and keep it, in cold storage, keep it away from any possibility of getting hacked, because the potential downside is very real. And there are financial brands which really struggle to recover and to regain trust after an episode like that. And they live long in the memory. I think as consumers,
Yep.
when you hear about something like that, it leaves a scar. And you can hear somebody mention a company, even now, when somebody brings up Target, and this is many years old at this point, I still think
Yep.
of the breach that they very publicly suffered, and through
Yep.
no real fault of their own. And again, they're not in the position of holding data. That wasn't something they were trying to do, but they got really punished for
Yep.
through from a variety of areas for making that mistake. So for me, I think that's really what it has to come down to. This question:
It's
what are you doing with the data to make it worth holding it? Because people say data is the new gasoline, and that's true, but gasoline can explode. So you got to be really careful. You got to make sure you know what you're doing with it.
That's such a fascinating thing, because I've never thought about it like that. I always go and ask CEOs and all that when they say, "Oh, we have a lot of data." I said, "What are you doing with the data? Are you getting any return on that data?" But I think you are also bringing up a very fascinating thing. There is a cost to holding data, and there's a cost of not just of compliance. There's a cost of the explosion, and it's like nuclear fuel in a way, right?
Mm-hmm.
So, and I don't think people talk enough about that. But that's probably a podcast by itself. I'm just
Yeah.
going to go a little bit into some of the things you mentioned. You started off at the beginning by saying the algos you don't see, and credit
Mm-hmm.
scoring is one of those things that consumers don't see, but it affects our life in fundamental ways, right? I mean, your FICO score in the US is something that pretty much determines what you will get and not get, right? And
Mm-hmm.
as you're seeing more and more AI that's being used for credit scoring, loan available eligibility, the personalization of the option, whether it's the interest rate, the tenors, etc. And there are two kinds of emerging consensus out here, and both are probably true. One is that it's faster, it's more accurate, it actually enables more people to get credit. On the other hand, it's biased, and it perpetuates the existing bias of the data set or the individual doing that. So, what's your take on where AI, the utopian credit future, the dystopian credit future, whichever way it is? Any examples you can share of where AI is going to take the lending business?
So I think I'll start by saying I think we're already in a dystopian lending situation. I think that the situations that we have and the way that we look at credit worthiness is fundamentally flawed, and it's archaic. It's based on things which don't have a huge amount of relevance. If you look at credit scoring as trying to answer this simple question, will you pay us back? And that's really what it is.
Mm-hmm.
It's trying
Yep.
to answer this basic question, will you pay us back? And I think if you look at the system that we have in place and you look at recent history, it's not too hard to say that we do a really pretty bad job of anticipating who's going to pay us back, right? This is, and we sort of just accept this. We accept this risk that it exists here. We accept that, we can do the best we can, but we still know there's going to be, X number of defaults, and we build that into all of the models and everything like that. And I think this is where it gets really difficult for banks to move beyond that, because knowing a system is broken is one thing. Replacing it with a system that's better is another thing altogether. From my standpoint, I look at what's possible now from an artificial intelligence capability, and you see people who are applying AI tools towards this question, will you pay us back? And they're able to find a huge number of metrics which are much more closely tied to how likely somebody is to pay you back, that are virtually ignored by the current credit scoring systems.
Could you share some examples, Greg? Because this is so fascinating. And, I liked what you said. I till now thought that the system of credit scoring was what it is and it is okay. And you just described it as dystopian. Not a lot of people do that. Everybody thought it was utopian. So I'd love to get into a little bit more specifics on what do you think of the new ways in which people are actually finding out these metrics. I mean, it's such a fascinating area.
Sure. So, I mean, if you look at what the current credit system does, it ignores massive portions of the global population. People who, through no fault of their own, are just categorically excluded. We're blanket denying huge swaths of the population. Inside the U.S., there are massive numbers of people who struggle to establish credit because they don't have somebody who can sign on to that first credit card. They don't have a co-signer somewhere, right? This is one of those areas where if you have a privileged background, your parents can help you establish credit at an early age, then you're off and running. You can start to get this documentation, this credit history going really quickly. If you don't, it's so difficult to catch back up. And so there's a company that has won Best of Show a couple times at Finovate called Meaner Analytics, who really looks at this question, are you going to pay us back? And what they're finding is that they're able to dramatically expand the types of people that a bank can safely lend to without incurring massive amounts of additional risk, by looking at other factors and the ways that people answer, fairly common questions. And so, I think I will be the first to say I'm not privy to exactly what's going on in the background, exactly how that algorithm works. But they're able to look at a lot of people that the current credit system blanket ignores, just blanket denies, and are able to make this group available, and dramatically expanding a bank's potential customer base. But more importantly, getting people to a point where they have access to basic banking services, where they can start to do things. When you get your paycheck, that you can actually deposit it without losing 7% to a check casher, or if you need a short-term loan, you can do it at a rate that's not 33%. So and I think I want to come back and just kind of defend my dystopian statement a little bit more. If you look at the population of the world right now, and you think, what percentage of them are potential customers for banks? Do you think it's more than half? Do you think more than half of the global population is a potential lending risk? Because I don't. And if you look at that system on its face and say, and I'll be clear here, I don't have data that suggests, that this is kind of based on gut feeling, but if you look at it and say, we have a system right now where there are literally billions of people who are prevented from accessing any credit whatsoever, that to me is a major problem. That's a gigantic problem that needs to be solved. And if you come to me and say, I can tell you right now that no one in this group of, let's be conservative, let's say 2 billion, no one in this group of 2 billion is trustworthy. None of them are going to pay us back. I'm calling you a liar. I'm saying there's no way that can possibly be true. And given that we have a system that really dramatically overvalues where your parents have come from and your creditworthiness of the people in your life, dramatically undervalues how creditworthy you as an individual are. And that to me is where there's a really significant problem.
Greg, it's so fascinating to listen to you. In fact, I don't think your dystopian thing needs any defense. I just felt when you used it, it shifted my mind immediately, because we tend to take the system for granted and say, oh, this is disruptive. But Actually, it's not. What you're saying is the present is not actually right, and anything that can improve that is better. And it's such a good example of how AI can do good for the world, because here it is. I mean, risk is always measured through data. A credit decision is using data. You're saying people are using alternative forms of data to make that lending decision. And to me, it's one of the great uses of AI if I can actually find that. And also develop models, I guess. Today nobody has a model to say if I lend 100, to 100 people in this group, will they pay it back? So you need to start the process, and I think that's what you're describing. Greg, again, conscious of the time out here, and I want to talk about something that you mentioned. I'm going to go back to your son and social impact and purpose, as you call it, right?
Mm-hmm.
Here's another fascinating use of AI that we're hearing a lot about, and just wanted to get your take on it. Obviously, and ESG guidelines are becoming very important for companies worldwide, and now there's apparently a machine learning algorithm that can measure whether a company is meeting its ESG standards. Hedge funds are starting to say, are you going to be, having positive impact on the world and so on? What do you think of this whole use of data to actually measure things like purpose? So I think, what do you think of this whole thing where ESG standards are being, I mean, data is being used to measure whether you're actually doing good for the planet?
So I applaud the idea. I think that it's a really good idea. And I think it's good to start looking at the actual metrics, something that you can quantify and really get to, demonstrate how companies are doing when it comes to fulfilling their promises in these areas. Now, that said, I think the real challenge comes from the idea that, what is good, right? This is something that is going to be a different definition for every individual. And my concern is that if you look at something, you get this type of governing body that says, we can have this data that says, you actually know you're good, you're doing what you can do from ESG standpoint. That it, there's the real danger that it ends up limiting the upside. If you get if you establish a minimum bar, then a lot of companies just have to get over that minimum bar, and we lose the companies who are really going for it up top. And so, but I think when I look at it, this is something which I think people feel on a personal level. You as a customer have a view of the organizations that you work with, and how socially responsible they are to you might not be how socially responsible they are to somebody else, depending on a wide variety of factors. So, I think that it's a really personal piece. Now, I haven't spent a ton of time studying this tool and what's possible. If it really is able to kind of push everybody to get to a minimum bar and it's gives us this kind of data, then great. What I just hope it doesn't turn into one of the situations. We've seen the way this is kind of factored when it comes to like environmentalism in the past, when there are various licensing agencies that say, we certify this as a green product. What does that mean? What is a green product exactly? Or, we certify this as carbon neutral. And again, this is all getting into this thing of how do you really delineate that?
Again, I'm going to go, and I think, I'm going to go back to your idea of the sun and, the way you started this thing about Finovate. Why wouldn't companies let their customers actually decide what is good and let them vote with their feet? Because, again, you looked at what you said about, the way you do matchmaking today.
Yeah.
If your son is a customer and there are a million of them who want to support the panda, shouldn't a
Right.
company actually be saying, I could do this? You don't need another body or a standard necessarily, right? You should be able to find a way where data is actually used to guide some of these decisions of what is good. Because what is good? What is good is what people around the world think it is.
Yeah.
Again, I think that's probably another rabbit hole that we could go down to.
Yes.
But Greg, just to wind up, I think we've talked about where fintech is going, where you're seeing banking, the industry going, and a few key AI-led innovations. Any one or two big predictions where you think data and AI is going to take us in the next? Let's not worry about 10 years. Let's say in the next 3 or 4 years.
Sure. Well, I think, and that's a great place to end it. And so from my standpoint, I think it was maybe 2016 that I saw the first AI play on the Finovate stage, the first like kind of purely AI play. And then by 2018, in my kind of back of the envelope math, it was about half of the demoing companies were using AI in some way. And there was this shift away from kind of, we can use AI to, we are using AI to solve X. And I think that's a really important shift in the industry, because AI at its core is really just a tool. it's not a result in and of itself. It's a path to a result. And so I think that, the future of the industry as it relates to AI is going to be application based. It's going to come down to where there really are problems that need to be solved, where it makes sense for AI to get involved. And the honest truth is, it's probably going to become an ever present. It's going to underpin just about everything that we see. And then, of course, the question becomes, okay, well, where does that data come from that feeds into it? Because that's the really crucial piece of the equation. And, flawed data produces flawed AI. And there's a really clear line between these two things. If you put biased data in, you get biased AI. There's no shortage of amusing stories about AIs that have been trained to act badly in any number of different ways. The hard part is coming up with one that's bias free. If we get the right data set, I suppose we could imagine that happening. But at the same time, I think this is really what is going to define the success of these AI plays: the quality of data that you have, the ability to understand and clean and make this data usable. Is going to be extremely important. And now we're seeing at Finovate a number of companies come up and start to support these ideas that say, we can help you take the data that you have and make it more usable. I think there's going to be more of these kind of data support, data cleaning types of plays, because I do see AI really being underpinning a huge amount of different types of technologies over the course of the next couple of years. I mean, it's already happening. There was maybe we took a little bit of a step back during the pandemic where people focused on some more urgent problems, but I don't see any reason that this trend is not going to continue. And I think pretty soon we'll be, companies that don't use AI, I think will probably be in the minority, at least in some extent. When you get to the point that event organizers are using AI, then everybody's using AI really at the end of the day.
No, but I'm looking forward to the day. I'm looking forward to the day when your son turns 18 and he's able to not even walk to the bank, but they've anticipated everything and say, here it all is. We know what you need to do, and and kind of provide you all of that service on your little smartphone or a biometric chip. And that day is probably going to come. Like I said, we can continue talking a lot about this, and I'm sure we'll have you back on the show again. We have Greg Palmer, FinTech columnist, podcaster, vice president at Finovate Group, a connected man who makes connections in the world of FinTech. Thank you very much, Greg, for being on Slaves to the Algo. And Slaves to the Algo is available on YouTube, Spotify, Apple Podcasts, Google Podcasts. We release a new episode every Tuesday. If you enjoyed this week's episode, don't forget to rate, share, and subscribe. Stay safe in the age of COVID. Stay relevant in the age of AI. Thank you once again, Greg, for being on the show, and see you all next week. Thank you.